Good afternoon and welcome, a very warm welcome to you. Ladies and gentlemen, we hope this is the last of such meetings in this online form, because it is our wish, and we believe that the best conferences would be the ones where we can meet together and we can take your questions from the floor and reply to them instantly. But now, with the COVID curbs, we have decided to hold this meeting under the full sanitary regime and remotely. I'd like to welcome all the representatives of the media outlets who've joined us here, and I would like to inform you that we do await your questions at media@grupalotos.pl, and we are going to plow through them in real time, and we're going to get back to you afterwards the conference, or if there are too many of them or they're not relevant to the topic of today's meeting, then our press office will be delighted to get back to you later on. It is my pleasure to welcome and introduce today's speakers and the persons who've joined us. I'll start with Mr. Jarosław Wróbel, the Deputy CEO for Investment and Innovation. Hello and welcome. You are the board member who's joined us as Grupa LOTOS quite lately, and I'm even more delighted to introduce you to the media and journalists. Also, Wojciech Zengtaler, the head for investor relationships. Good afternoon. And CFO Przemysław Krysicki. I would like to ask Mr. Deputy Chairman Jarosław Wróbel for Investment and Innovation. Please take the floor. Hello and good afternoon, ladies and gentlemen. It's a delight to welcome you in my new role, sitting on the board of Lotos Group. My presence here arises from the fact that I would like to announce a new strategy for informing and liaising with media with regard to investments of Lotos Capital Group. The financial results for 2020 will be presented by my eminent colleagues who've been with Grupa LOTOS for many years now, and I'm sure they know the results inside out. Speaking of investment matters, as part of new openness strategy, we are going to invite you twice a year to join us for meetings. The first of those is going to be held in June this year. As part of our expert panel talks, we are going to talk about the currently completed investment at Grupa LOTOS and investment underway, as well as the investment we are hoping to see to a successful end as a multi-energy conglomerate. Speaking of the circumstances under which the company has been functioning, of course, we've been experiencing headwinds arising from COVID-19 pandemic. But what is equally fundamentally important, if not more important, is the fact that Grupa LOTOS, or LOTOS Group, as many other fuel and energy companies, has been struggling or grappling for a year and a half with this new reality, the new technical revolution embodied by the Green Deal in the European Union. Of course, the results we are going to talk you through have been affected by such strategic documents as the new methane emissions strategy for EU, also hydrogen strategy, and currently combined strategy for the implementation of investment taxonomy in the EU under the Green Deal document. And we've experienced that already, and that is why, to a varying degree, we have noticed that from the pricing of hydrocarbons, speaking of crude oil and natural gas. Now, why don't we move on to talking you through our financial results for 2020, and in the second part of the conference, I'll be delighted to take any questions from you. Thank you very much, Mr. Chairman. I I would like to stress it again that we are at your disposal, media@grupalotos.pl, and you can feel free to email us your questions, and we're also going to meet you regularly. The first of those meetings has already been said by Chairman Jarosław Wróbel this June. We hope to hold it in a face-to-face regime and hold a panel discussion for experts, and we hope to do it face-to-face this June, and we hope it's going to be a very important event for our group. Now Wojciech Zenkler, the Chief for Investment Relationship Bureau, is going to talk you through the finished results for 2020 and Q4 the same year. Thank you very much. Moving on basically to the first slide, where we have the summary, slide number 4. As it has been said by Mr. Chairman Wróbel, we have grappled with very difficult macroeconomic environment. I believe since Grupa LOTOS was listed, this microeconomic environment, speaking of hydrocarbons, pricing for crude oil and natural gas for production and exploration, and also refining and marketing margins, the conditions have been the least favorable in the current more than 10 years. The LIFO Ebitda, so the key parameter without one-off, was 1.36 billion zlotys versus 2.86 the year before, and the fall contributed to by exploration and production, where we had a decrease of 25%. The cause of which were lower pricings for crude oil and natural gas, and also the Ebitda for exploration and production, which dropped by 60%. Also, we would like to stress that what is key, speaking of any economic organism, i.e. cash that we've been generating in our operational activity, has been on a good level. Almost 2.9 billion allowed us to lower our gearing ratio and have all the indicators within favorable conditions, and also pay out 1 zloty dividend per share for 2019. Out of VIG20, only 5 of such companies have paid out such dividend to the stockholders. We have also kept high flexibility of refinery under those difficult circumstances. That's why we have utilization rates, which is more than 98%. And now moving on to how we compare to the competition. Moving on, we have a graph which shows the Ebitda LIFO adjusted. The top left corner, as you can see, we have a much lower level compared to 2019 and 2018, which is a reflection of what we've already talked about. But in the bottom left corner, when you have net cash flows below 2 billion. I think this awareness that those flows could be disturbed because of operating cash flow, but I think it's just a snapshot, and it also testimony to stable financial situation of the company. On the right, at the top right corner, you can see that crude oil throughput in Gdańsk, we've processed more than 10 million tons of crude oil, and exploration and production in excess of 20 BOEs daily. Let's move on to the next slide. You can see a similar snapshots for the fourth quarter of 2020, and the results under the strong pressure of the most difficult macroeconomic situations To date, the model margins, the fourth quarter is always the time when we tend to grapple with difficult realities. We need to also reinforce the fact that the result was also burdened by CO2 emissions and reserves. It's inextricable from our business, obviously, but we had to set aside such reserves in Q4, but we should see them in a broader perspective to the entire business across the year. Our gearing ratio is 1.4, which is net debt is 1.4, which is higher than the previous years, which is attributable to the fact that LIFO Ebitda has dropped, and also net debt has dropped by 1 billion zlotys. Speaking of our daily exploration and production, would be 18,000 of BOEs, which is 29% less than in previous year. But also in the previous year we had the novelty effect of Utgard field, and that's where the production exploration were kept at a very high level. But that oil field has got a significant drop. That's why this is what we've observed. Let's move on to the next slide, and I'm going to give up the floor to Mr. Przemysław Krasicki, who's going to talk you through the macroeconomics.
Thank you very much and welcome. Macroeconomic environment starts with two slides. First one on global crude oil consumption. And as in mid-year, we've already told during our conference, there's been a significant drop in demand for crude oil in the second quarter of 2020, which reached 83 million barrels per day. There has been a slight rebound until the fourth quarter 2020. As you can see, there's been a recovery to 94 million of barrels per day. Our experts expect, as you can see in the graph on the right-hand side, a recovery up to 98 million barrels per day of crude oil in a perspective until the end of the year. As for the dynamics for passenger air traffic, in April last year has seen a near total standstill in passenger air traffic, and the recovery in the subsequent months has been continuous, but as we can see in the slide, it's been a rather slow process. This is due to the stringent restrictions on travel. And according to IATA estimates, the recovery to the demand for air transport and passenger air transport services back to the 2019 level will not happen before 2023. Why are we showing this slide on air transport? This is an important factor in planning the production, because jet sales may not be our key product, but lack of demand for this particular product entails significant difficulties in planning of production of the entire product mix. And now, another slide, please. Here, we have traditionally presented the macroeconomic environment versus our strategic assumptions, which last year have been prepared prior to the impact of the pandemic. We're showing it to illustrate how far our expectations came from in regards to our key production parameters to the situation in the market in the 2020. As you can see, the Brent-dated pricing dropped by over 33%. Natural gas saw even larger drops reaching almost 50%. In terms of product crack spreads, in two key segments, we've seen significant decline. We've planned production cracks for gasoline for $166 per ton, and we've seen a 54% decline. And for diesel, this drop came to 52%, reaching $56 per ton. Heavy fuel oil saw a reversed trend, although the impact of sales of heavy fuel oil is significantly lower than of the two previous presents. The situation was the opposite, and the crack spreads for heavy fuel oil has been reduced by 58% and still being negative minus 94%. Now, moving on to another slide. Here, you can see our basic macroeconomic indices for exchange rate, GDP growth, and domestic fuel market. The exchange rate for dollar to zloty, which is the most important exchange rate, in the fourth quarter, we ended up with 3.78, slightly lower than in Q4 of 2019, but due to the situation in the second quarter, when the exchange rate was significantly higher than in 2019, the average exchange rate for the entire year was at the level of 3.8, being 10 groszy more than in 2019. GDP growth in 2020 has declined, and after the first significant drop in Q2 to down by 8.4%, we saw a slight rebound, but we are still in a decreasing tendency. Moving on to fuel consumption, Polish market has significantly recovered after the second quarter, when the first impact of the pandemic restrictions has struck. So diesel consumption has returned to the pre-pandemic levels from the end of 2019, so that is 5.6 cubic meters and 5.4 in Q4 2020 cubic meters. Gasoline consumption, after a significant drop in Q2 2020, we saw a recovery in Q3 to 1.8, and in the fourth quarter a slight decrease to 1.4. So we still see this lack of stability in consumption, which will be heavily influenced by any possible restrictions, especially those that affect mobility. Moving on. This is the final slide dedicated to macroeconomic environment. Once again, but this time presented in a time perspective, the pricing of gas and crude oil. We can clearly see the impact of the restrictions in 2020 Q2 and the decline in petroleum products demand, which resulted in the decline in consumption, down to $30 per barrel and down to $9 per. Later on, the price has rebounded slightly to $44 in Q4 2024 crude oil, which is definitely below the fourth quarter of 2019. The gas prices have been following a slightly different trajectory, which, after a significant drop to $9 for BOE, have grown to $30 in Q4. Also, the key product spread prices in dollars per ton have followed a similar trajectory. We can see that gasoline saw a decline in Q2 2020 and a slight rebound to 69 in Q3 and then to 60 dollars per ton. As for diesel, we saw a significant drop to $47 and still no recovery and following the price of $30 per ton. Thank you very much. And now moving on to other segments.
Ladies and gentlemen, after this introduction on our results and the microeconomics, our reporting segments from the bottom of the value chain. Let's start with exploration and production. A lot has been said about it already, so allow me just to reiterate that despite the fact that the results are, well, weaker than expected because of the falling prices of crude oil and natural gas, as you could have seen it in the previous slides, as presented by Mr. Przemysław Krasicki, but also the effects were write-downs for revaluations of assets, which reflected the deteriorating macroeconomic situation, and that also affected the IME project to 910 million. That's the amount of write-downs for exploration and production. Speaking of the drop of stocks, so 10%, we were able to reevaluate reserves for Heimdall and Sleipnin, and I'm going to talk you through it later on. We have also reconstructed 8 drilling wells at B3 fields, and we are enhancing production to the initially assumed levels. And we're also completing the B8 field development stage, and also what's most fundamental at this moment is the future. The first matter is the YME field. We have successfully placed Maersk Inspirer oil rig on it, and currently we are maintaining the target production to Q4 2021. Speaking of more distant future, we've been working on NOAKA optimum development concepts, and the operator declaration of May last year, the PDO, so Plan for Development and Operations for those fields, and the filing with the Norwegian authorities is expected to be successful by the end of 2022. Speaking of B4B6, natural gas fields in the Baltic Sea, because of this difficult macroeconomic indicators and very low natural gas prices, the final investment decision with regard to this project has been postponed, and it will be taken depending on the market conditions and on the projections and forecasts, as such a decision is not just a matter of today's price, but in the horizon of production exploration for this field. Why don't we move on to the next slide then, please? Here you can see a snapshot, as is a quarterly tradition of production and exploration, our reserves and production. I would like to focus attention on Atgard field, which has currently been producing at a very low level, which reflects the troubles Equinor has been facing in this field. That's the Q4 situation, but we've been informed that one of the wells has been reconstructed, so the production level for March is twice of what you can see in the graph. Generally, the cost of lifting, the cost efficacy of the Norwegian fields in the single digits, which means even under very difficult pricing conditions that we've been grappling in the past year, the business in Norway is definitely in the black. And why don't we move on? This is where you can see quarterly overall production figures broken down into oil and gas. As I've already told you, a much lower level compared to last year is a reflection of Udgurt issues, and also Udgurt as a field with a very high level of production. When we started production, it enjoyed this launching effect. That's why the level could be really high, speaking of production, but it couldn't be kept up in the following quarters. And let's move on to the next slide. This is the decomposition of a breakdown of reserves, what we talked about in the first slide, 81 million BOEs at the end of the previous year, and you have the breakdown of production into Lithuania, Poland, and Norway. The reclassification in Norway shows re-evaluation for Sleipner and Heimdall, revision upwards, which is the effect of the work of our operator on this field. That is why, as every year, we can actually pump out more from this field than we'd initially assumed, and we've been pumping much more from that field compared to what was assumed when we acquired that field. This parameter is a bit revised downward because of the reclassification of the Udgurt field, so the issues we were grappling with while working on the field, but what extends beyond the time horizon, i.e. 2021, is the rebuilding of one of the wells and increase of production. We expect that this field could be reclassified upwards. And a very important element which shows how such reported results are burdened with the consequence of external circumstances. Please do have a look that in the graph on the right, Ebitda that we report, minus 764. We have some elements to it for clean Ebitda for 2020, and the key factor here is one-offs, actually. So the sum of write-downs I've already talked about, 911 million zlotys, out of which 460 million for IMA. Two factors that really affected the situation. First of all, the downward revision of pricing for crude oil, and also lower forecasts for pricings, more conservative approach of accountants and auditors with regards to the forecasts. And despite the fact that you can see that the pricing of oil barrel is akin to last year's, and also the delay that we had with IMA, just an act of God, and there was a lockdown, and all the working staff who worked at Maersk Inspire had to leave Norway, and this is what caused the delay. Let's move on. Quarterly breakdown. Also with the breakdown of particular elements which mediated the reported results. What you can see here is the rebound in Q4 compared to Q3 in 2020. And it is a fact that we've been having some windfall because hydrocarbons have been picking up in prices, but also the higher pricings for crude oil and also natural gas. That's why we expect a bit in the first quarter for 2021 to be at a solidly high level, which is going to compensate for the troubles that we enjoyed in actual marketing and refining. Let's move on to the next slide, and this is how we move on to consolidated financial results for refining and marketing. And the 19th slide, you have the most important events for 2021.
We have completed our flagship EFRA project at the beginning of the 2020. Throughout the year, as it's been told already, we've been struggling with difficult environment, which is important that the LIFO, according to Ebitda, was weighed down by the old oil inventories, which resulted the LIFO Ebitda parameter to be lower, but did not affect the cash flows generated by the company. So the situation is slightly better than it may seem looking at the figures. The refining margin, a key parameter, has returned in the first quarter. We use a new calculation method which takes into consideration the EFRA project launching. So the entire 2020, which needs to be highlighted, has been dedicated to optimization of our activities. As Director Krasicki mentions, we've reduced the production of jet fuel as the market has shrunk radically. We've increased the production of bitumen products as these products were priced higher than diesel at times, which is unprecedented. And we've also maximized the production of oil bases, which had favorable prices. Our filling stations, retail filling stations, has grown by 7 units up to 513. And what's important, it will be having a maintenance shutdown, which is moving on fluently and without interruptions. We've been facing serious risks related to this complicated operation, which requires presence of numerous subcontractors in the premises of the refinery, which in the pandemic environment is a challenge, but we seem to have succeeded in this task. And another step forward we've made towards the acquisition by PKN Orlen, and we've implemented remedies model and preparations to reorganize the capital group, which we've already reported on in our current capital report. The refining output structure, as you can see, the drop has not been significant compared to our competitors in the regions. We are using our production capacity at the highest level, and we are still the best among the best. And thanks to the resilience of Polish economy to the pandemic, as Director Krasicki mentioned, the recovery of diesel demand, which is unique among the European countries, was one of the factors, and thanks to us being present in this market, allowed us to function at our full capacity, which is definitely not is an unusual thing in the market, because the throughput of other refineries has declined by around 15%. Moving forward on to the results. We have annual operating results of the segment in 2020 compared to 2019. Again, very low operating performance, but the LIFO effect makes this puts our business in the green. We are suffering from certain accounting convention, but if we were to see a strong recovery of oil prices, we would be in the green by a far larger margin, but this again would not reflect our actual result. And finally, we have a quarterly perspective on our performance. Ebitda, according to LIFO, on the level of 60 million, which is significantly lower than in the previous quarter, but we need to be aware of several contributing factors. Firstly, it has been the most challenging quarter of all thus far, and as it will be also reflected in the margin models, it's also traditionally the worst quarter for refining industry, and we've also allocated some of the reserves that should be considered in a longer time perspective. However, we place them in this fourth quarter. And our final slide, which is the key efficiency parameter, which is the model refinery margin, which is composed in 63% of diesel and jet fuel, 23 it's light fractions, that is gasoline, naphtha, and LPG, own consumption, that's 6%, and heavy fractions, 8%. This model margin has reached $1 in the fourth quarter, which is the lowest level since a very long time, which affected our performance. However, as you can see, starting from January 2021, we are in the green again. That is all for refining and marketing, and now moving on to consolidated financial results.
Ladies and gentlemen, we move on to consolidated financial results. Traditionally, we are going to summarize our entire presentation, whereby we combine all the segments into a graph that compares the financial successes of 2020 and 2019. And as Mr. Wojciech has already said, the net profit result for 2020, the just accountancy as such, is minus 1.1 billion zlotys. But for us, the most important parameter that we compare against is clean Ebitda LIFO for 2020. This is where one-offs have been taken into account, non-cash costs, and that clean Ebitda LIFO 2020 was 1.3 billion zlotys, which is still less than in 2019, 53% less to be more precise, but as you can see, the specific parameters, especially the macroeconomics, were much less favorable. Speaking of the breakdown of these results, this is where we have the decrease of LIFO EBITDA, also amortization. It was 1.09 billion zlotys. It's more than 180 million higher than in 2019. This is mostly mediated by the commissioning and depreciation of the EFRA complex. Speaking of the one-offs that we've already quoted, speaking of production and exploration, those mediate Ebitda LIFO by minus 924 million, but 911 of those are attributable to E&P segment assets impairments, and those write-downs entirely arose from reassessment of macroeconomic environment, and as such, they did not affect any deterioration of technology project, anything that would be within the remit of our control. 90% of it is attributable to the macroeconomics, so when the macroeconomics rebound, those impairments will probably be reassessed. Speaking of the third most important element that lowers clean Ebitda LIFO, which is the LIFO effect that we have talked about already, and in 2020 It amounted to minus 740 Polish zlotys. And in 2019, it was just 141. Now let's move on to the next slide.
I na tym slajdzie mamy
Here you can see a similar graph breaking down just the fourth quarter. This is how the details shaped up in Q4 for 2020. You can also see that clean Ebitda LIFO in Q4 amounted to 201 Polish zlotys, and it was 66% lower than clean Ebitda LIFO Q4 in 2019. And the falling of this Ebitda was mediated by depreciation, 293 million zlotys, so quite proportionate across 2020, and definitely smaller effect of one-offs, as you can see, 45 million, and also the LIFO effect was minus 144. And EBIT for Q4 2020 amounted to 17 million zlotys. Let's move on to the next slide, please. And we move on to operating cash flows versus CAPEX. In the first slide, we have already talked about the fact that in 2020, despite this difficult situation and unfavorable macroeconomics arising attributable to global lockdowns and oscillations of prices on markets, the accumulated operating cash flows were better than in 2019. In 2020, operating cash flows amounted to 2.9 billion zlotys. Speaking of CAPEX in 2020, as you can see, we spent 842 Polish zlotys, whereas in exploration and production it was 385 million zlotys, which is mostly mediated by the project on the Norwegian shelf, ENP Norway, and also ENP projects in the Baltic Sea and Poland, 111 million Polish zlotys, of course. And the CAPEX for retail amounted to 140 million zlotys, spent mostly to roll out network for retail, and also for refining and marketing, 317 Polish zlotys. And as you can see, the biggest contributors here were 65 million for strategic projects, HRO, HBO, and EFRA, the finalization of the letter in the first quarter of 2020, and 148 million Polish zlotys attributable to other projects, and 105 million zlotys attributable to logistic projects. And the last of these slides in this set. And traditionally, we've got three key indicators that tell you the story of our financial standing. As you can see, net debt. Despite the unfavorable macroeconomic situation, we could not only, as a colleague of mine has just said, could pay out dividend to our stockholders, but we could also pay our payables and also repay our debts. And net debt, as you can see, compared to 2019, dropped by more than 1 billion zlotys. But I'd like to also reiterate that out of 1.9, 1.2 is impacted by the famous IFRS 16 leases implementation, which in terms of accounting forced us to recreate the value of leasing liabilities, and we had to then to recreate the assets, but this is how those liabilities were shown in balance sheet. Now, speaking of net debt, it has dropped from a gearing ratio from 23% to 17%, 11% of which is the IFRS 16 leases implementation, and also net debt to Ebitda LIFO parameter as a key quality indicator in our company. It has slightly increased from 1.0 in 2019 to 1.4 in 2020. Obviously, it has mostly been mediated by a significant decrease of the base, which is a bit LIFO. As you can see on the left, between 2019, it was significantly decreased, but the 1.4 level that you can see, we believe it's just testimony to the fact of the sound financial standing of Capital Group LOTOS. Thank you very much.
Ladies and gentlemen, now we'll be moving on to the Q&A session, and as we've been doing so far, we won't be able to read all your questions, so we'll just solve this issue by answering the questions that are pertinent to financial results, while other questions that are outside the scope of our conference will be answered on an ongoing basis by our press communication office. So I'll start with the first question, which has been sent by Mr. Piotr Rożek of Polish Press Agency. I'd like to ask about the question about the investments in 2021. How will the capex look like across various sectors? What are the main investments planned for this year? What is the impact of the merger with PKN Orlen and selling the assets to an outside partner? Answering this question, the capex as approved is between 1.3 1.4 billion zloty, and which breaks down to upstream of around 500 million zlotys, and refining will see the large HBO program implemented, which is the production of base oils, which will consume around 200 million zlotys. Other issues cover other areas of our activity, such as the hydrogen or the preparation of the infrastructure. The Lotos company will definitely have the increase of the efficiency of its investments as a key priority. Since March, we've been revising all the projects underway at Lotos to select those which, given the current outside and internal factors, have the highest efficiency, and we'd like to focus on these. And on the other hand, we want to substantially reduce the costs of particular investment tasks so as to focus on increasing the efficiency of implementation of particular investment projects, especially in the upstream segment, and this is where we see most room for improvement, starting with the harmonization of the organizational structures, servicing costs, and the costs of investment projects. We also want to harness the potential of the Lotos Group for the wind farms sector in the Baltic Sea, and we want to take part in the project as a contractor using our companies and segments in the group so as to keep as much funds from the project of the wind farms in Poland as possible, and our group would like to earn quite a lot under this project. Also, there is this mega project of the multi-energy conglomerate being created, and in June we will present this unprecedented opportunity for Lotos Group in our investment plans, so as to have the petroleum industry and the Lotos Group and the jobs creation grow, especially here in the Tri-City. Polish press agency asks why the company decided not to include the retail segment and what would the results would be. And I take it that it's the table 14 which has the answer to this question. So this would be our answer. A lot of your questions have already been answered in the first speech or the presentation by Mr. President. So there's another question regarding wind farms asked by Business Alert. So what is the progress of the operator in creating the fleet of offshore wind farms, and what is this financing structure? Currently, Lotos Group is revising its investments projects, also in the context of participating in the wind farm project and program. We will be informing you on ongoing basis about our progress and the recent developments in June 2021. Another question also in relation to what you've already mentioned, speaking about the communication strategy, please elaborate on the technical aspects. The journalists are keen to know more about the debate that you mentioned. The debate will involve experts, and on one hand, we'll be presenting specific investments that have been carried out and the stages of implementation of our investment plans. We'll focus on what has already been done and not only announce future plans. I'm in favor of the old school of mathematics when 2 + 2 = 4, and I will defend the thesis that 2 + 2 is 2 and is 4, not approximately 4. And I hope that the meetings with other experts will, as prepared by our communication department, will see all the representatives of all the main press and media outlets, and there will be an opportunity to ask questions to the management of the Lotos Group, and we'll try to answer any doubts related to the implementation of our investment program. So transparency, honesty, and openness, these are our key priorities in regards to this debate. And a question that has been repeated by several media is on the talks with the Russian partners related to the chlorinated crisis and any possible reparations. We want full openness And as long as the trade negotiations are underway, we shall not communicate any details, as this is a matter of respect of our partners. And once the negotiations are ready, once their outcome is known, we will communicate it. Thank you very much, Mr. President. Thank you for all the questions. As I've already mentioned, the remaining questions will be answered shortly. And ladies and gentlemen, this is all for our conference, where we've presented the consolidated financial results for Q4 and the entire 2020. Once again, our speakers included Mr. President Jarosław Wróbel, Vice President for Investments and Innovation. Thank you. Wojciech Zenkteller, Chief of Investor Relationship Office. Thank you very much. And CFO for Grupa LOTOS, Przemysław Krysicki, and Adam Kasprzyk, Director of Communications at Grupa LOTOS. Thank you very much. And we do hope that our next conference on the results will be an in-person conference, and we hope that we'll meet face-to-face, and we will also, we do look forward to any possible talks over the coffee break, which we sincerely miss.